Welcome to the chat. Right here in the market analysis and prediction, we engage the market mechanics, otherwise known as the liquidity providers concept, to give us an insight into the possible direction of various pairs in the forex market. Let us take less than a minute to explain candlestick patterns. As you can see, price ranging right here, forming a cluster of white candles. These white candles signify selling pressure. Meanwhile, as you can see, price trending up, creating a series of lower highs and higher highs. These green candles, they signify buying pressure. Meanwhile, a candle that is neither green nor white, that has no obvious color, that is neither green nor white. Let me look for an example. Like this candle right here, it signifies indecision in the market. So this signifies neither buying or selling pressure, but indecision from buyers or sellers. As we are aware of in the liquidity providers concept, we look out for liquidity and trap zones. What are liquidity and trap zones? Liquidity and trap zones are zones that have a cluster of pending orders. They are where the aggressive money lies. These zones are where the aggressive money lies. So if you are looking out to making aggressive money in the forex markets, you must look out for liquidity and trap zones, because liquidity is the energy of the market. It is what moves price. Without liquidity, the market will not move. As we all know, forex trading is a zero-sum game, and some have to lose money for others to make money. So the concept of liquidity is what makes it possible for some to lose money while others make money. Because if there is no concept of liquidity in the market, then you just expect the market to move in a straight line. So liquidity is what causes the market to range. It is also what causes the market to trend. So now the whole concept of liquidity is knowing where to recognize them. These zones can be seen in the daily highs and lows, swing highs and lows, monthly highs and lows, weekly highs and lows, and yearly highs and lows. But for the sake of clarity, we are only going to be focusing on the 4-hour chart, because in my opinion, the 4-hour chart is a time frame that is easier to monitor, flexible to monitor, and it can be used by swing traders. It can be used by scalpers for their top-down analysis. It can be used by day traders also for their top-down analysis, because this time frame gives an overview of the 24-hour, which is divided into 6 time frames. That is 2 candles for the Asian session, 2 for the London session, and 2 for the New York session. So you can see that it divides each session in a way that is easy to monitor. However, if you are using robots, algorithms, or whatever to trade, you can use any time frame. But as a human being, it is easier to track the chart in 4 hours than in hourly or minutes. So that is just my preference. Let's just get straight to business. On Euro USD, at the opening of the Asian session, you can see that the sellers put in pressure. However, they failed to break the low of yesterday. And the second half, you can see the sellers pushing price further down. Following from this, we are going to expect a sell to buy. Let us keep 2 important concepts in mind. The first concept is that we need to always look out for liquidity zones before we take a decision. And the second concept is that we need to keep in mind that the market sells to buy and the market buys to sell. If the market does not sell first, it will not buy. If the market does not buy first, it will not sell. What is the reason for this? The reason for this is because forex trading is a battleground, and in every battle you need to leverage on the weakness of your enemies. So if the buyers want to buy, they leverage on the weakness of sellers. So if there is no sell already, how are you going to leverage on the weakness? And as sellers, if there is no buy already, how are you going to leverage on the weakness of the buyers? So now we can see sellers here. So for the buyers to leverage on the weakness of sellers, as the sellers already have a bias that the market will sell further down, the buyers are going to push price when sellers continue to scale in. That is, by the London session, there will be further manipulation to the downside, inducing more sellers. Then the buyers will push price up with one or two candles, break the structure up. Then we can confirm that the euro will strengthen against the US dollar. However, if that does not happen, we make no decision on this trade. And fundamentally, today is a distribution day, and the majority of market participants, the banks, hedge funds, traders, professional traders, they have a positive sentiment towards the market. In forex trading, you always need to be a step ahead of the head. Now, on USD CAD, at the opening of the Asian session, we see the buyers putting in pressure. However, they failed to break the high of yesterday. And the second half, we can see buyers pushing price further up. So now, following from this, we expect a buy to sell. So we expect the sellers to induce buyers to take more position, then push price down, break the structure down with one or two candles. Mind you, one or two candles. And these candles at the London session need to close as bearish candle. They need to close as sell candles. You only make decision based on the close of a candle. You don't make decision when a candle is forming, because in the forex market anything can happen. On USD CHF, a strong support was broken yesterday. However, this support had no much of a structure break. Nevertheless, at the opening of the Asian session, we can see the buyers putting in pressure, trying to rally the market up. However, they failed to break the high of yesterday, and the second half, we can see the buyers putting up to expectation. Following from this, we expect a buy to sell. So if the sellers are going to create a counter trend, they induce more buyers to take position, then push price down, break the structure, break the low of the day, then we can conclude that the USD is going to weaken against the Swiss franc. On USD JPY, at the opening of the Asian session, we can see the buyers creating a manipulation, inducing more sellers from yesterday New York session, pushing price up. And the second half, you can see them pushing price further up, trying to play a classic AMD pattern. However, this is a weak support. Just because you see candles buying up doesn't mean that you should make a decision to buy, or you should just think the market is going to buy. In my opinion, this is a trap, and if price retraces back down here, I doubt that often more than not, it is very likely that this support will not hold and price will break through. So following from this, we expect a buy to sell. We expect sellers to manipulate more buyers, push price down, and sell this pair further down, so that the USD is going to weaken against the JPY. On GBP USD, at the opening of the Asian session, we can see sellers putting in pressure. However, they failed to break the low of yesterday, and the second half, we can see the sellers trying to put in more pressure, maintaining their dominance. Following from this, we expect a sell to buy. So we expect the buyers to manipulate more sellers to take more sell position, push price up, break the structure up, and for these candles in the London session to close as bullish candles. As we know, the Asian session usually is the market maker's trap, so that is why a counter trend always forms during the London session. At the opening of the USD CNH, you can see the buyers putting in pressure, trying to play out a classic AMD pattern, manipulating more sellers with this week, pushing price up at the second half. This is a trap. Most likely, if price retraces here, we can expect this support to be broken, as this is a weak support. And the opening of the London session, we expect the sellers to manipulate more buyers, push price up so buyers can take more position, break the high of the day, and later on push price down with the bearish candle. This has to close as a bearish candle after manipulating buyers to scale in, push price down, break the structure down, break the low of the day, then we can conclude that the USD will weaken against CNH. The obvious patterns here, we can most likely conclude that the US dollar will weaken and other pairs quoted against them will strengthen. Here we can expect a sell to buy. As you can see, the second half a sell candle, so we expect buyers to manipulate sellers to take more position, which is occurring. I expect this candle to push up, break the high of the day, close as a bullish candle, then we can conclude that the New Zealand dollar will strengthen against the US dollar. On GJ, at the opening of the Asian session, we can see the buyers putting in pressure, and the second half, we can see buyers putting in more pressure, trying to create a manipulation. However, this is a weak support. So just because price keeps buying doesn't mean you should buy. You need to have a strategic plan, as we expect a buy to sell, a counter trend. So we expect the sellers to manipulate buyers to take more position. This candle should push down, close as a bearish candle, push down, break this structure. Then we can conclude that the Great Britain pound would weaken against the Japanese yen. On silver, at the opening of the Asian session, we can see buyers trying to outsmart the sellers from the closing of yesterday's New York session. However, the sellers push price further down. Following from this, we expect a sell to buy. However, the sellers make an impulsive move. However, in the market, anything can happen. So if that should happen, there should be manipulation for more sellers to the downside, breaking the low of the day. Then the bullish candle closes up, breaks the high of yesterday. Then we can conclude that silver would buy further up. I'm not analyzing gold today. Do the analysis on your own. On Euro JPY, at the opening of the Asian session, you can see the buyers in this zone strong, playing out a classic AMD, manipulating sellers from yesterday's New York session to take more position, then pushing price up. And the second half, the buyers maintain their dominance. However, this is a trap. So if price retraces here, I really doubt this support will hold. And the second half, we expect a buy to sell. So we expect the sellers to manipulate buyers to the upside, so buyers can take more position, scaling, break this structure down, breaks this structure down. So we can conclude that the euro will weaken against the Japanese yen. Not doing this analysis, do this on your own. Let us analyze DXY. On DXY, we can see the buyers making a move at the opening of the Asian session, and the second half, we can see the buyers pushing price further up. However, we expect a buy to sell. So we expect the sellers to manipulate buyers to take more position, push price down, break this structure, break the low of the day. Then we can conclude that the DXY is going to sell. On BTC USD, at the opening, we can see the sellers making a good move down. However, they failed to break the low of yesterday. And the second half, we can see sellers putting in more pressure. However, we expect a sell to buy, and that is not occurring yet, because if that is to occur, you can see the second half, they need to induce more sellers to take more position, and the buyers would manipulate them to the upside. Let me clean this box to see if it is occurring. This is not occurring. So if that should occur, they need to induce sellers to take more position, deceiving them, then pushing price up, breaking the structure up. Then we can confirm that the BTC would buy further up. Plan your trade, trade your plan, manage your risk, and most importantly, manage your emotions as well. Have a peaceful day ahead.